Hello and welcome to the most important interview for financial markets. I have with me the Governor, Reserve Bank of India, Mr. Sanjay Malhotra. The governor who has stunned the market in the last 6 months by giving 10 trillion rupees almost in liquidity, by cutting the repo rate by 100 basis points, all in 6 months, cutting the CRR by 100 basis points again in the last 6 months, effective September. With all this, the market still wants more, like Oliver Twist. So, Governor, thank you very much for your time. First up is the Tuesday inflation number, June inflation number, coming in at 2.1%, lower than most market expectations. And now the April, May, June number is 2.7. Reserve Bank's forecast was 2.9. And on the street, the expectation is July will be 1.8. And the full year will be way below the 3.7 that Reserve Bank forecast, probably close to 3. Therefore, does it open up space for a rate cut? In fact, for rate cuts?
See, we are in a neutral stance, as you are already aware. So, the MPC, this is of course, first of all for the MPC, not for me. But you are right that the MPC has decided to change the stance to neutral, and so what this means is that we can go in either direction. It gives us the flexibility to move upwards or downwards depending on how the outlook, more importantly, rather than the current data which we have now only for Q1. Rightly you have said that it has come down. But how is it going to look like going ahead? And we do our own internal assessments. Whether it will be 3%, I really don't know, because those calculations we are still in the process of doing them. We will certainly come out with our latest projections. And the MPC, as always, will factor in the evolving situation, the outlook, and then therefore take a call as to whether the economy really needs what kind of a policy rate it needs. If the inflation is lower, the forecast therefore the outlook is lower, the growth is lower, certainly the policy rates can be cut, but that is something that we have to wait and watch.
What is the trigger for a rate cut? Will it be more lower inflation or will it be lower growth?
It's a mix of the two. It's a mix of the two really. One can't really say that it is inflation which is more important than growth numbers. For us, as you are aware, it is primarily we look at price stability. That is our core mandate. That is the primary objective. And then we look at growth also. Both are equally important, and I would not say that we would give more emphasis as of now to either numbers. We also need to be aware of the composition of the inflation, and especially when I say composition, I mean the momentum and the base effect. Of course, core and food is another way of looking at it. But how is this inflation going to look forward in future? That will be more important rather than the 2.1% or the current inflation that we have.